So good morning, everybody. Thanks very much for joining us here. It's great to be here. And I'm actually going to talk about fintech. That's the theme of the whole Congress. And I'm actually going to talk about a 50-year-old fintech company, Mastercard, and tell you what we've been doing to get ready for and embrace the next revolution of payments, which is full digitization of payments. My name's James Anderson, and I'm responsible for digital payment products at Mastercard. I'm based out of New York City. I have teams in London and New York who help me develop the products, which I'm going to talk about. But I think most of you probably don't think of Mastercard as a fintech company. But in a very real sense, we are a fintech. We've always been involved in the financial services business, but we don't do the things that banks do. We don't take deposits. We don't lend money. That's what our customers do. And so we help those customers provide a great service to their customers through technology, and that's the tech part. So we really are one of the earliest fintech companies, and so given we're talking about a 50-year-old company, I thought I'd talk a little bit about some of our the timeline that got us here. So the company was actually founded all the way back in '66, and you can think of the history of Mastercard as really solving one very big problem time and time again. So it's very fashionable with fintech startups to ask them, what problem are you solving? How do you create value? Why do you need to exist? And in the case of Mastercard, there was a very real problem that we started solving back in the '60s. And it's a little sort of amusing history lesson, which was back in the US in the '60s, there were these rules and laws that said that banks could only operate in one state of the United States. So they were issuing payment cards to people, and if you can imagine, if you went 200 miles and crossed a state line, you actually couldn't use that card to make a payment because the bank was not chartered to operate in that other state. And so that was clearly a source of customer frustration, and what was born was payment networks. Payment networks to solve that problem, which is where the merchant and the issuing bank don't know each other. And in some sense, the next 50 years, we've just continued to solve that same fundamental problem at bigger and bigger scale, time and time again. So as soon as we solved interoperability and usage of the cards within America, people started traveling. And they wanted the same convenience they had from when they were in their own country when they traveled. So we needed to follow them, and we needed to support global interoperability, which we did. Over time, the incomes rose around the world, and other people in the rest of the world wanted to have the same convenience, and so we set up local issuing, and we've been continuing that trend for 40 years. So Asia, Latin America, all around the world, we now issue cards, and obviously we have acceptance as well. I think it's still happening today. 3 years ago, Myanmar opened up, and more recently, Cuba opened up. So that trend has continued. The other trend has been a continued advance in the technology that we use to enable payments. We started off with some pretty low-tech technology, so you can sort of see it here on the picture, which is the classic embossing. In fact, our initial data capture technology was embossing, which was raising the profile of the card so that when you ran it through a zip-zap machine, you could actually imprint it into carbons, which was state-of-the-art in 1966, I guess, and is actually still supported on our network today, 50 years later. Obviously, that wasn't a very scalable technology, so as a result, we initially pretty quickly implemented magstripe, and then another 15 or 20 years later started with chip technology. And it's all been around delivering speed, delivering convenience, and also delivering security at scale. So we've had a pretty good 40 years. We now have 2.3 billion cards on our network and 40 million merchant locations, and obviously a widely recognized brand. But something happened sort of towards the end of this timeline, which was happening outside the payment industry, but has had a very big impact on the payment industry. And essentially, it's two big trends we all recognize in our daily lives, which is the internet and mobile phones or mobile devices. And they started World Wide Web. I went to the 25th anniversary of the founding of the World Wide Web recently. So essentially, at the end of this timeline, the World Wide Web started becoming a phenomenon, and our merchants started selling there. And that was very useful for helping grow our business. But also, mobile phones started becoming a phenomenon. And we saw early on that represented both a huge opportunity and a significant threat to our business, because obviously that's a very powerful network, those devices are very powerful, and we needed to figure out how we connect the power of our network to the power of the mobile devices and the mobile network. And so the last 10 years has really been a set of projects, pilots, to try and figure out how we make that combination happen between these two very powerful networks. So you'll see a number of brands there. We did a number of projects and pilots, API Developer Portal, Google Wallet 1.0. We took our best M-chip technology and made it work on mobile. And we've launched a number of projects with merchants like Wagamama and with digital players. We've done a lot of work in transit as an everyday use case. And so it's been a lot of activity, and as somebody who's been pretty close to it, it's been very exciting, and we've had lots of fun trying to figure out. But it's been a little hard to tell kind of like the big picture, what we were building. And about a year ago, though, I think we sort of realized what we were actually building. And this is what I call the digital stack. So if you think about technology over the last 30 years, there's been this transformation from technology that is owned by individual companies, developed and controlled by individual companies. And you think of that as kind of stovepipe technology. So if you go all the way back to mainframes, they were developed top to bottom by IBM, they're mini computers by Digital, and then on and on. And then at a certain point in time, the industry's pivot, or the technology's pivot, from kind of a vertical to a horizontal orientation. And I think that's what's really happening in payment right now, which is we have made that pivot to being a technology or an industry comprised of horizontal layers of technology. So our stack, at the bottom of our stack, is the Mastercard network. The Mastercard network is a lot more than just a physical network. It's a set of rules, a set of processes, models for risk allocation, and it's obviously where our 2.3 billion cards live today. It does the authorization, clearing, and settlement and money movement. What we've built on top of it, though, is something we call MDES, which is the Mastercard Digital Enablement Service. And this was a set of technologies that we realized we needed to take those 2.3 billion cards and make them work in a digital context. We launched this back in October 2014. The initial launch was to support Apple Pay in the US, but we always conceived of it as infrastructure to support the growth of our business into digital. And so we have a bunch of new services in MDES, which we've never had before in our network. So we have the idea of the ability to do what we call consumer identification and verification, which actually is sort of a remarkably obvious problem, which is answering the question of, is this person actually the person who owns this account? But what we realized when we started working on digital was that we had no network scale answer or service to answer that problem. So we built it into MDES. The other thing we built into MDES was tokenization. We realized that our network was built on the idea of a very tight mapping between an underlying account and a PAN number, which is what's embossed in the card. And it works pretty well when all you're using is cards to pay. But if you fast forward, as we were thinking about it, and we thought of a world of 20 or 30 devices per consumer able to effect payments, we realized that we needed a more flexible model, so we created network tokenization so that there's a mapping in the network, in our case in MDES, between the individual card number that the consumer recognizes and the card number that the merchant of a device has, and we call that tokenization. And then the last thing we built into MDES was we took all our best EMV technology and we figured out how to embed it right into the heart of what we were doing in digital. So all the proven crypto techniques of EMV went into MDES to support digital, because we were adamant that we wanted to make sure we had security built in from the beginning, so we weren't trying to add it in after the fact. So that's MDES. We've now got almost 1,000 issuers connected into MDES, and it's scaling out extremely well. But infrastructure doesn't get anybody excited, other than geeks like me. What you need is something that consumers can see. And so the next level in the stack is what we call the wallet level, which is essentially, this is where the consumer starts to see something that they can do, because this is now a representation of their physical wallet in the digital arena. And we've made a decision as Mastercard to support a number of wallet types. So obviously we work with the big digital players, Android, Apple Pay, Samsung Pay, and indeed we've recently launched Android Pay here in Poland, which is very exciting. But we have a very distinct strategy around the one on the left, which is Masterpass. So we made a decision that we wanted to make sure that our banking customers were capable and able to compete on their own terms in digital. And so our Masterpass program is a digital payment service that we offer to our banks for them to take out to their consumers so that they can compete on a level footing with the digital players. There's a couple other use cases at the wallet level, one of which is merchant card on file. Many of us have left our card numbers with merchants that we know and trust and shop at often. And that's a great user experience until something changes, like your card number or the expiration date. And then it becomes a terrible user experience. Now we have this idea of a token vault in the network. We can actually solve for that problem by having the merchant hold a token instead of a real card number, and we just map back to that in the network. So this layer of infrastructure in MDES is starting to reveal lots and lots of interesting capabilities and services. And then the last one is IoT, or as I like to call it, IOPT, the Internet of Payment Things, which is the idea of enabling all kinds of physical form factors like fitness bands and watches, and also all kinds of screens like in-car, thermostats, all of those to be payable or transactable devices. We want to have a token in all of those places, and that's our IOPT program, which we're supporting and announced. We actually announced it at 2020, a year or so ago. And then the last level is the interface technologies, which is all the things that the consumer starts to see, the browsers, the merchant applications, which is obviously a source of huge innovation right now, and contactless, which obviously Poland's been a pioneer and one of our biggest supporters of contactless. So in Masterpass, we support all those interface technologies, and actually more as well. One of the things that's interesting about having a horizontal stack approach is that innovation is actually much easier because you don't have to build all the way down to the network. You're able to essentially build at the level. So I was in India a couple of weeks ago, and we announced something called Masterpass QR, which is a new form factor for you scan a QR code and you're able to do a push transaction. And that took a small team about 9 months to develop and roll out in India. So I think what we're seeing already is this horizontal stack is doing, as it has done in other technologies, it is enabling innovation at a new pace and faster than has been the case previously in payments, which is really very critical because one of the things that's exciting about digital is obviously the pace of innovation, and one of the realities is that that pace of innovation is not controlled by us. So in the past, in the payment business, in 50 years, we had 3 technologies, right? We had embossing, magstripe, chip, and we had 2 flavors of chip, contact and contactless. But clearly, if you look at the technology pace in digital, there's new technologies being introduced all the time, and for us to stay relevant, we need to have the ability to support those technologies, roll them out where they're fit for purpose, and experiment much more easily than was the case previously. So let's talk a little bit about what this means for startups, because I think there's a couple of lessons that I take away from this, from our journey, which I think are relevant. So these are some use cases that we've spent time on as Mastercard, building out new digital experiences. So new restaurant experiences in Colombia, in Czech Railways, being able to use Masterpass to buy your ticket. Tremendously successful program in Singapore with Comfort Taxi for enabling them to compete better with Uber by using Masterpass, and a very successful program in South Africa. And so these are just examples of things we've worked on with different partners. So I think as we look at fintechs, we look at startups, I think there's kind of 3 lessons I would draw. The first lesson is that unlike in the past, you really don't need to build a lot of the infrastructure to be able to have a business in fintech. We've actually built a lot of the infrastructure. What I described is up and ready, it's running, it's scaled out already. And it enables you to essentially ride on that infrastructure the same way that the banks all around the world who were issuing MasterCards for the last 50 years relied on us to provide infrastructure. We're ready to provide that infrastructure for the digital age. I think the second lesson takeaway is that the banks are really leaning in to digital in a way that we haven't seen previously. They realize that this is a real opportunity and/or threat, and they are looking for the ability to differentiate in this space. And that creates opportunities for partnerships that have not been there in the past. So I think that's a tremendous opportunity if you're looking at starting something up, which is to say, how do I create a win-win and have distribution through banks who already have the customers and make them more digital as they go out into the market. And then the third thing is I think it creates huge opportunities around merchants as well. The merchants have generally been very digital in many markets because they've had to be. They're much closer to the consumers. And they're looking for solutions, creative solutions every day that enable them to deliver a better solution, a better end experience using digital tools to their consumers. So from one 50-year-old fintech to a bunch of fintechs who I assume are a little smaller, a little younger, thank you very much for your time, and good luck with the journey.